we want to bring in Nouriel Roubini, professor of economics at NYU's Stern School of Business, also CEO of Roubini Macro Associates. We're also joined by Yahoo Finance correspondent Julia LaRoche. Nouriel, it's great to have you back on the program here. Let's start with Bitcoin, because the last time you were on with Adam and Julia, you were talking about Bitcoin and you were saying you were very skeptical of it, that it has no fundamental value. So I'm curious just to get your take on the massive rise that we've seen since then and why we're seeing so many investors bet on Bitcoin.
Well, there's a massive rise, but there is a huge amount of volatility. You know, overnight it fell more than 12% and now is down 7% for the day. And you have to ask yourself whether retail investors and institutional investors should be investing into something that is so risky and something that is not a currency and is not even an asset. I think it's volatile. I think that some of the movement upward is driven not by worries about inflation or debasement of fiat currencies, because gold is not going up very much. Tips are not going up very much. Why would just Bitcoin be a hedge against inflation and debasement of fiat currency? There must be something else. Something else is that there is massive manipulation. We know there are pump and dump schemes, there are wash trading, spoofing, there is front running even by exchanges. And there is this phenomenon of Tether, a stable coin that is produced out of nowhere with, we don't know which kind of backing. And every other day there's $1 billion of it issued that goes to buying Bitcoin. So I think there is massive price manipulation. There are a bunch of whales and insiders that are manipulating this market. And we know there are a whole bunch of legal investigation by the DOJ, by the CFTC, by the Attorney General office in New York that are looking into what's going on. So I think it's a very risky asset class.
Nouriel, it's Julia LaRoche, and you're mentioning some of the whales who are in the space, and you believe it's a risky asset class. And I think the last time we did speak, you said that, look, this thing has no place in an institutional investor's portfolio or a retail investor's portfolio yet. We've seen a lot of retail investors in the space. We have seen a lot of big names, very well-established names enter this space. So like, why not? Why not have just the tiniest little percentage allocation in Bitcoin? What is the argument against just having some exposure?
Well, there are some people that are risking their entire house on it. I mean, if you take Tesla, if you exclude the credits that they get for gas emissions, it's still a money-losing firm, and now they're betting all their entire cash on Bitcoin. If you want to become a Bitcoin fund, be a Bitcoin fund, but not an electric vehicle company. Or MicroStrategy is a tech firm that was flat for 10 years, didn't go anywhere, pretty much, and now the CEO is betting the entire cash and borrowing a $600 billion on Bitcoin. So you're not a technology company. There are people who are doing lots of risky stuff. You know, the people are institutions. Everybody wants to trade the stuff. Everybody wants to be custodial, because regardless of whether it's worth 0 or 50, they want to make money out of the trading. It's not as if Goldman Sachs or the custodians believe in this asset class. If you can get a cut out of the exchanges in the crypto space, so be it. And, you know, institutions are weird. You know, Scott Minerd from Guggenheim Partners one day says, we're going into Bitcoin because it's going to go to 400,000. And the next month he says, no, it's going to go down to 20,000. Just make up your mind. The reality is that nobody knows what the value of this pseudo asset is. It doesn't have any value because it doesn't have any income, doesn't have any use, doesn't have any utility. So it's a total speculative play on a bubble that is self-fulfilling. And now we have, like in 2017, hundreds of thousands of retail suckers that are having FOMO, fear of missing out, going into this asset class. And they're going to buy at a peak like it happened in December of 2017 when Bitcoin was 20,000 and it fell to 3,000 by the end of the next year. So it's the same phenomenon, just people moving in because of FOMO, feeding the bubble, manipulation, and eventually there'll be a crash. I mean, overnight, 12%. Which asset class has that volatility?
Let me just keep this simple, because a lot of us, we get moved by the big sway. Fortunately, I don't have $50,000 to buy a Bitcoin, so I'm not at risk, but you could do a fractional, you know, you can buy a fraction of it. Is there any purpose for Bitcoin? I hear you dismissing it, but I think I'm missing something.
Well, an asset, usually stocks, bonds, loans, real estate, they give you income, and therefore there is a reason for the capital gain if the dividends are not fully rebated, the profits. Other asset classes like real estate, residential, gives you housing services. You know, gold doesn't have income, but has uses in industry, as utility, as jewelry, and has been used for liquidity purposes and as a store of value for thousands of years. So you're asking yourself, what is the fundamental value of Bitcoin? It doesn't have any income, doesn't have any uses in industry, doesn't have any utility. You cannot have a gold chain of Bitcoin, doesn't give you any pleasure, unlike gold and jewelry and other stuff. And therefore doesn't have any intrinsic fundamental value because it's not even scalable. You can do only 5 transactions per second with Bitcoin, while you can make 24,000 transactions per second with the Visa network. So it's never going to be able to be even a means of payment. And it's not a unit of account. It's not a single numeraire. So people say it's a store of value against tail risk. But when in February, March of last year, US stocks went down, say 35%, Bitcoin was not a hedge. It went down by 50%. Another cryptocurrency went down by 60%. And if it's a hedge against inflation, what's the fundamental value that leads it to be a hedge against inflation? And if people are so worried about inflation, why Bitcoin goes from 5,000 to 50,000 while gold has been correcting downwards and break-evens are barely above 2% and tips are giving you returns are still relatively mediocre? If people were really worried about inflation, they would diversify in a wide range of assets that are historical good hedges against inflation. That's not happening. So that might not be the reason why Bitcoin is going higher. So it must be manipulation. There's nothing else that explains this movement.
Nouriel, stick right there because we want to take a quick break. But when we come back, we also want to talk to you about the economic recovery, the stimulus package that's being negotiated down in DC right now. We'll be right back in just 2 minutes.